Everyone, you are welcome to this class. Now I want to look at this particular trade that gives us a very high risk to reward on this trade. Now, when we are trading, where we usually start from is from the higher time frame. Okay, we can use the monthly. This is the monthly time frame. Then we'll go to the weekly, from the weekly to the daily, from the daily to the 4 hour, and so on and so forth, to 1 hour, to 30 minutes, to 15 minutes, so and so forth. So our major focus on this particular type of trading that I usually do is what we call swing trading. Okay, swing trading, whereby we focus more on the higher time frame, and anything you want to do on the lower time frame, it has to be in correspondence with the higher time frame. Without much talking, now this on the higher time frame, on this particular pair, on this particular synthetic indices of volatility, this is on Derive. Okay, this is Derive platform. Now when you look at the chart right from the monthly, there's nothing we can usually spot here, because when we are trading, what we want to focus on is price making low, high, and then take the low, create a previous high, and then we want to see what price will do by the time it pulls back into this range between the high and then the low. All this I will explain in the following video. I just want to use this as an appetizer for you to see that this trading strategy is very effective. Now we start from the monthly, then we'll go to the weekly. Now on the weekly, we see different pullbacks here. Price is making different low, okay, high, low, high, okay. Price is just making different pullbacks. This is a previous high point, previous low point, low. Now price create another high there, another low, another high, another low. Price has taken it out. Without wasting much time, what we usually do is this. Now before this particular trade plays out, this is our major focus. I want to see how, if we are in the market, if we were in the market, we saw this trade before it will come and play out. This particular candlesticks, how many candlesticks are there? These candlesticks, okay, 1, 2, 3, 4, 5, 6, 7. We want to see how could we have caught this trade after we spot a previous high, a previous low, and then a new high, and maybe the price is just within this range, within these candlesticks. That is where the candlesticks were. Maybe after price has taken out the previous high, we have one candlestick, two candlesticks. Then before these other candlesticks will form and price will go in this direction, I want to see how could we have caught this trade. First thing first is to use our line to mark out the new high point. I usually mark that with a red line, red horizontal line. Let me copy it, and then I'll mark my previous low with a green line. So when I spot this, what I will do next is to pull out what we call Fibonacci retracement. I'll pull out my Fibonacci retracement. Okay, I will take it from the low, from the previous low point to this new high point that has been formed. I hope you are getting it. After I've done that, what I will now do is to do what we call top-down analysis. Like we have been doing, we move from the monthly, now we are in the weekly, right? From the weekly now, I've spotted the previous high point, a previous low, a new high point that is formed, and then I want to trade along this market, knowing that this is now what we call an uptrend. This is a buying market, previous high point taken out. So now what I will do is to switch to the corresponding lower time frame. From the weekly now, I will switch to the daily. But if I switch to the daily, using Fibonacci retracement, our major target as a swing trader is just the 0.6 and then the 0.7 Fibonacci level. Okay, 0.6 and 0.7. We want to see what price will do when these candlesticks that are coming back down get into the 0.6 and get into the 0.7 level. We want to see our candlestick formation and see if we are going to buy this trade. Now let's switch to the corresponding daily time frame. On the daily time frame, okay, this is the market now on the daily time frame. Like we mark it out, price is coming down, making different pullback. Now when price gets to the 0.6 level, okay, what I will do is this, for us not to be confused, let me go back to the weekly. let me mark out the 0.6 and 0.7 level so that we'll just remove the Fibonacci 2 to make our screen to be very clear. I'm marking out the 0.6 and 0.7 level. Now let's remove the Fibonacci 2. I've removed it. Let's now go to our daily. Okay, now on the daily time frame, you see this is how the price moved. Price came down, give us a new low. Previous high point that was there, price took it out. Yes, right? After price has taken out that high point, what are we expecting now is to do what? Is for these candlesticks to come into the 0.6 level. We're looking for our buying opportunity with our candlestick formation. I will try to put the type of formation I'm talking about, like a bullish engulfing candlestick, if morning star candlestick pattern. That's what we're looking for in this particular 0.6 level of the weekly that we're not looking at on the daily, right? But we are not seeing that. Then we wait for our buying opportunity on the 0.7 on the weekly also. We did not see that too. Okay, when we did not see that, assuming if we have seen that on the 0.7 level, what we are supposed to do next is to do what? Is to enter the trade and buy. Then we are supposed to buy this market. We'll buy it from the 0.7 level to the previous high point, this new point that has been formed. If this is confusing, please stick with me on the next video to understand it properly. Now, what I want to point out here is, since we did not see, this is the type of candlestick formation I'm talking about that we wanted to see on the 0.6 and 0.67 level. Okay, this is the previous low on the weekly. Now, the candlestick formation I want to see is this formation that is called a morning star candlestick pattern. Okay, where we have candlestick there, we have a smaller candlestick at the center, and where we have a new candlestick that that has a larger body ratio, shoots off this particular range. This is just like exactly what we are looking for to form in this 0.6 point on the weekly that we are looking at on the daily. I also want it to form on the 0.72, but none of that happened. Then you may be wondering, how did this trade put through now that we did not see any of our candlestick entry on the 0.7 and 0.6? The other thing we can do is what we call confluence with the zone. Now, what I mean is this: the previous low point that was formed, okay, we have what we call a morning star candlestick pattern there. Then this is a valid demand zone. Then we'll mark it out. When we mark it out, okay, we'll mark that zone out. You see what? Price, instead of price to give us a morning star candlestick pattern here or a morning star candlestick pattern there on the 0.7 level, price used the previous low demand, okay, this demand zone, to enter this trade. But we cannot enter this trade blindly like that also, because there's no valid reason for us to just enter this trade to see that this demand zone will hold up for this trade to become profitable. The next thing we are going to do is to go to the corresponding lower time frame again and check if there's, when a mother is pregnant, like a pregnant woman, you see the woman, and then inside the woman there's a living child inside. Okay, now I want to see if there's a valid another demand zone inside this particular zone on the daily. So we are looking at a demand zone on the daily. Then let's go. I want to go to the 4-hour time frame, which is the lower time frame of the daily, to see if we are going to see a demand zone there. Okay, another demand zone inside this demand zone. Or I hope what I'm saying is making sense. This is a day demand zone. I want to look for a 4-hour demand zone inside this day demand zone. So now let's switch to the 4-hour. When we switch to the 4-hour, we'll go straight to the left. You can see what I'm talking about. This entire zone is, our entire zone is the daily zone. But even inside that daily zone of the demand, that is a valid demand, I have the program explained of what demand, how to identify your zone, okay, a value zone. Now we have our what? Let me zoom in it so you can see it properly. We now have another valid morning star candlestick pattern on the 4-hour time frame that is inside the daily demand zone of our morning star candlestick pattern. I hope you understand. Now that is not that zone that we can now use to enter this trade and see. You see that it will go as anticipated. Let's go to the right and see what happened there. Price tap into the zone, into the 4-hour time frame zone, demand zone, and then boom, it was a beautiful trade. And this gave us, if you had entered this trade on the 4-hour time frame, let's see what we would have gotten. If you are risking $100 per trade, okay, that's on that zone. That's the zone there. I'll put my stop loss here. Let's put, if you are to put $100 on the trade, what we would have gotten. Now, if I put $100 on this trade, okay, our target with this previous high point would have gotten what? With $100 we have gotten 1,000. Okay, with risking $100 we have gotten 1,186 naira. That is a what? A 1 to 100 risk to reward ratio. Okay, and you can also go for 1 to 10, 1 to 5, any ratio, but this is the maximum we could have gotten from this particular trade. I hope you understand. So in the next trade, in the next in the next video, I will explain how you can easily spot this and how to easily make use of your Fibonacci retracement tool to able to identify this trade. So stick with me. Thank you.